Hey folks, Dan Free here, the rate update. Today is September 8th, 2021. Got some good news in regards to rates. I got some good news in regards to job openings. So don't go away, we'll be right back. Okay, so we have some good news on the employment front. There's more than 10 million job openings. Watch this.
Our July read on job openings and labor turnover, known as JOLTS, expecting a number over 10 million, and we end up with a strong number, 10,934,000, 10.934 million. This is July, the 7th month of 21, and it's the 7th month in a row JOLTS has been higher than the previous month. It really is an amazing record, and it does underscore that with record job openings, this data point goes back to 2000, never been higher, that we can't seem to be playing match game correctly with the openings versus those that need to come out of the unemployed force and move into the labor force. And this is an issue. Many believe it had something to do with benefits, which expired on the Monday, that holiday. So we will have to wait and see if some of this data improves. But many believe it's just a mismatch of skills and logistics regarding laborers and jobs.
Well, as you saw, there's 10 million, almost 11 million job openings. So there's jobs out there, guys. There might be the person isn't skilled for that position. I know there's a lot of job openings in travel and leisure and entertainment and food industry and so forth. So there are job openings out there. I'm still a proponent, and I hate to say it this way, but as the employment benefits stop, a lot of people are going to be forced back to work. As the forbearances stop, people are going to have to start making even more money if they, go back to work and so forth. So I think the jobs numbers are going to start getting better within the next 60 days, as Rick Santelli just said. It's not immediately because the unemployment benefits just lapsed last week. So now people might start feeling the pinch and saying, okay, now I got to take that position, or now I will start, or now I'll go back to work. Okay, so that's the good news on the front. There isn't really much in regards to real estate today, other than that jobs report in the JOLT index. So I hope you guys understand that. What the JOLT index is basically an index or a survey that's out there to find out how many job openings there are. There was an auction today, a bond auction today. I'm going to go through that with the economic calendar with you here in a second. And that was about it. As you just know, there's 10.9 million job openings. Companies are struggling. They're struggling to fill those positions. What happened today in the MBS market? Fantastic. Okay. And I said yesterday, we bottomed out, and I'm going to show you the chart here in a second. But the MBS market is dictated right here. What is it? And somebody said, Dan, you keep repeating yourself every day. I'm going to make it condensed. So if you don't really understand this, go back and watch a couple of my previous or older videos, and you'll get it. I promise you. But this is the biggest component of your mortgage rate. Okay, it's right here. It's a bond that trades on Wall Street. It's called a mortgage-backed security, but it's a bond. Okay, so as the price of a bond goes up, and this is just bonds 101, the mortgage rates, because it's a mortgage bond, the mortgage rates go down. Okay, but if this number went down, mortgage rates would go up. So let's go over to yesterday. And remember I said, it was kind of a dismal day yesterday, and I said we should bounce off of it. I was not locking anybody. Well, look what happened. We kind of dropped, and yesterday we dropped down and we hit this line right here. Why did I not lock? Well, it's because we hit this technical right here. That is the 100-day moving average. It held. We closed at that. So for me, that was a short-term bottom, and we were going to bounce up from there. So I'm expecting us to trade. If you see this number right here, 101.3, I think we're going to trade up. Okay, meaning as this goes up, rates come down. And I'm going to look at technicals right here, and I won't drive you crazy on this. I'm just going to tell you where I think we're going to be in the next couple of days or weeks. I think we're going to be trading between 101.6 and 101.2. Okay, well, there's a big variance there. Where are we right now? We're 101.3. Okay, all I want you to get out of it is this number goes up, okay? That means rates are getting better. So that's why I'm hoping we push up to the 101.6. I've been taking 101.4. That means rates will be a little bit better than where they are today. Economic calendar today, as you can see, the JOLT index came out, and there was 10.9 million job openings. The consensus thought was there were supposed to be 10 million job openings. Okay, that was it. And then the 10-year Treasury auction took place, and that did very well, and that's what helped support the market today. So let's see what the day looked like. We ran into it, and then right around noon-ish, sorry about that, right around noon-ish, they had the auction, and then from there we went up, which was good, nice rally. And then we eased back a little bit. But the nice thing is right here, this green candlestick tells me there was buyers into the close. Okay, so that feeds off to tomorrow. This number could even go higher. That's why I didn't lock yesterday, and I'm not locking today. So that's the numbers there. So where are we with rates? Again, guys, these are not my rates. These are the national averages. So you should, if you're looking for a loan, please reach out to us. That's what we do for a living. We help you buy a house. We help you refinance, reverse mortgages, home equity, or not home equity loans. We can do home equity loans. We do reverse mortgages. We do rehab loans. We do cash out. There's a ton of people pulling out cash right now. They're getting lower rates than they currently have. They're paying off a lot of bills, and they're saving a ton of money. But this just shows you where the national averages are. Okay, it comes from Black Knight. They surveyed mortgage lenders all over the country. These are the 30-year terms. Guys, everybody's asking for a 15-year or a 20-year or whatever. I can't make this video an hour long, so if you're looking for a 10 or 15 or 20 or 25 term, please reach out to us. We can give you your own customized rate. But right now, you're looking at the 30-year conforming at 309, the jumbo at 302, FHA at 317, and VA at 277. 1 day, 7 day, 4-week delta. Delta means change. Basis points. Let's look at this basis points. So since yesterday, rates went up 2 basis points. What does that mean? It means 0.02. So virtually nothing. Okay, it's really not. It might affect your mortgage payment by $1. Okay, so that's what's going on. You can see that nothing really happened here other than, I think this is a typo because I don't think VA yesterday was 2.67. So that might be a little fluke there. But there's your deltas for the 1 day. Virtually no change. The 7 day, the week, no change. Okay, the 4 week, no change. If there's a parenthesis around it, that means it dropped. So that means yesterday, if this dropped 1 basis point, that means yesterday's jumbo rate was 3.03. Let me give you a little trick at this. Why this, when I say that, you know, a 0.02 or 2 basis points or something like that really is irrelevant. Mortgage rates normally trade in eighths. Okay, so it'd be 3, 3.125, 3.25, 3.375, 3.5. Okay, so when you see a rate on here is 309, there is no such rate as a 3.09. So it's probably going to be 3.125. Okay, so that's the closest eighth it is. So basically, you need that move to push it to the next eighth before it's going to really change the rate. So when you see a 0.02, a 0.03, a 0.04, it's not going to change the rate until we hit to the next, you go over, you're going to need at least a 0.125 change for the rates to change. Just giving you a little bit of feedback there. So that's it for today. I do have a video posting. I'm still working on it. I apologize. I'm going to do a rent comparison. I guess I'll put it that way. So tomorrow we're going to have a big video, and then the next day I'm going to do down payment assistance programs for you guys to go over if you're lacking a down payment. So tomorrow come back, please watch that video. I'm going to show you rents throughout the country and how much that rent could buy you in a home. So the next thing you might say is, Dan, I don't have the money for the down payment. Well, the following day, I'm going to go over all the down payment assistance programs we have for you. That some of them will give you $20,000, $25,000 in grant money, free money, to help you buy a house. So if you'd like to find out more about me and my team, please go to my website. But what I ask you to do is please give me a thumbs up. If you find value in my videos, give me a thumbs up, subscribe down below, hit the bell every time I post a video, you get an alert. So here is my website. It is therateupdate.com. Go there. All I need you to do, don't apply online unless you really want to, unless you've worked with us in the past and you know exactly what you want. If you do, hit the apply now button and you're on your way. But most people, they have questions. That's where we stand out above a lot of companies. My average loan officer has 15 years in the business. All the files do come through me. I've been doing this for 33 years. Why do we do all this? Why are we so concerned about talking to you guys? Because we want to educate you. Education is power. It's knowledge. And it could save you a ton of money. For example, would you qualify for a conventional loan versus an FHA loan? Why would you? Well, there's good and bads about both situations. If you qualify for a conventional loan, you have high credit scores. Somebody puts you into an FHA loan, They shouldn't. Okay. But they might. Okay, why? That might cost you an extra $10,000, $20,000 over the life of the loan that you didn't need to be in. We want to educate you guys and say, here's why and what we would propose for you. You're the boss. You tell us what you want to do. But here's why I would propose this program for you and this, to do it this way and structure it this way and so forth. You're part of this. It's your house. It's your payments for 20, 30, 40 years. You need to make the decisions, but you need to be educated before you make that decision. You can't just click and go. You wouldn't do that if you're, buying a car. You do a lot of research on it. So what I'm asking you to do is please consult with us. How do you do that? Well, it's pretty simple. Two things. One, give us a call, 844-775-LOAN right here. Okay. That's the phone number. What most people are doing right now, they're like, okay, how do I put a meeting together? There's Zoom. There's all this other stuff where we can actually sit down with you basically in person, almost virtually. Click that. And you're going to set up a meeting with me. And you're going to go, it'll pull up all the days and times available. You'll click that. Then what you're going to do is you're going to say, hey, I'd rather do this by Zoom than by phone, or however you deem you want to do it. And then expect on that day at that time, we'll be reaching out to you the way you want us to. And what I'd ask you to do is what I ask a lot of people to do is be prepared. Be prepared. If you want to refinance, have your mortgage statement ready, have some numbers ready, because we want to walk you through what, why, where, and when. So thanks a lot for watching, guys. Come back tomorrow, because tomorrow we're going to show you how you can probably buy a house in your area and save money on your monthly payment than you're paying in rent. So God bless, guys. Take care. I'll see you tomorrow. Bye-bye.